What's going on, guys? It's Jimmy here. And now, with all these banks failing, we've had the second and the third largest bank failures ever in the history of the United States, all within the last month or so, and other bank failures also. Now, will be more be on the way? Will your bank fail? And are all these banks FDIC protected or not? Are these banks even covered? And is the Fed going to cover everybody's money, your checking account, your savings account, your Social Security deposits? These are all good questions. And the question is how, this is a domino effect. That's why these banks are failing in a row, and they're all trying to posture to protect each other. But how deep does this rabbit hole go? Well, here's the former Treasury Secretary on why this is happening and are we going to be protected? Take a listen here.
As Joe mentioned, joining us for this morning to talk about the banking crisis and the Fed is former Treasury Secretary under President Obama, Jack Lew. He also served as White House Chief of Staff and as the Director of the Office of Management and Budget. And Secretary, thank you for being here. We all know that as Treasury Secretary, you couldn't say anything other than you support the strong dollar policy. You're not Treasury Secretary anymore, and I just wonder what you think when you look around at everything that's happening in the banking world right now.
Good to be with you this morning, Becky, under circumstances that we all wish we weren't talking about. The strong dollar is fundamentally a reflection of a strong U.S. economy.
Oh, I'm kidding about the strong dollar. I just mean you can say what you want now.
I think that you would say as a private citizen what you would say as Treasury Secretary, I think. In a situation like this, obviously, as Secretary of the Treasury, you're fairly limited what you can say. So I come to you today in a different capacity.
So what do you think?
Look, I think fundamentally, we still don't know exactly what happened. The forensics are going to continue. Every day we're seeing more details come out. What is clear is that you had some banks that got into a difficult position. What you don't know for sure is whether the things that could have been done to prevent it. I think the actions that were taken last weekend were effective in terms of saying we're going to do what we have to do to stabilize the situation within a system of limited discretion. The regulators only have so much flexibility, and the systemic exception where they said there was financial stability risk was the basis for stepping in. So I think they've done a good job with the tools that they have.
Is it concerning, though, to continue to see the regional banks, not only their stock prices drop, but deposits continue to leave those banks? If they had done most of what they were able to do in a very limited framework, was it enough?
Well, I actually think you're seeing the deposit outflow change. Last week, it slowed considerably. Whether it's enough remains to be seen, but I do think that the action they took had the effect that was intended to stop the outflow. You have this mismatch between what's happening with deposits and what's happening with stock prices, and it's fundamentally because the risk to shareholders remains real out there. I think the fact that they did the backstop to protect depositors was the right thing to do. I don't think there's a way to ensure shareholders that the value will not go down.
Are all depositors insured at this point or not? Because there's been some questions about whether this was an implicit guarantee from the Fed, but can they do that? Can they not? And Janet Yellen, the Treasury Secretary now, has basically said we can't.
Well, I think what they did is they went to the extent of the authority that they have to protect depositors. That's a powerful signal. I don't think it's effective for policymakers to say we can do things we can't do. They don't have the power to just announce we're going to guarantee all depositors. They will have to make a case-by-case decision of whether the systemic risk warrants that action. I think the signal that they sent was that the threshold for systemic risk is not that high right now.
Yeah, so stocks actually bouncing back because of the Fed's signaling that they will protect people for the time being. But as you heard the former Treasury Secretary there say, they can't actually protect everybody as a policy They just can't do it. It's a case-by-case basis. So is your money actually protected? Well, we don't know. We just don't know. It's a risk. And here's the next thing. The Fed, Jerome Powell, the Fed's meeting is actually will end here in 48 hours. Yeah. So in 48 hours, we're going to know if they're going to raise interest rates here yet again. Now, this is not an easy call here this time because they may raise interest rates or they may stop now because of this banking system failure, collapse, domino effect. This is now a systematic problem because more might be in the works. So it would kind of be like adding fuel to this fire that is already burning. So this is a significant problem. And a lot of Americans don't want them to add more interest rate hikes because they've already done it, I think, 8 times in the last year, 12 months or so. And every time they raise interest rate, it raises your credit card rates. It raises new mortgage rates, variable mortgage rates, new car loan rates, used car loan rates if you're going to get a new car or a used car, personal loan rates, any variable loan rates, credit card rates. And take a look at this. A new study finds 186 banks vulnerable to the SVB, Silicon Valley Bank-like collapse. And remember, we've had multiple banks fail. It's not just this one. The study created a scenario where half of 186 banks' depositors withdrew their funds. A run on the bank situation, which we've seen happen now. And this is not just like, these are big banks, right? These are banks with billions and billions and billions of dollars in assets. If this happened, we would see a financial meltdown in our country. This is very bad. Another major problem to this, and this is not going to make Americans feel safe. Most people don't know this unless they're maybe watching my show or happen to see this particular piece of data. Analysis: declining U.S. bank reserves add wrinkle to contentious debt ceiling issue. And remember that the debt ceiling also needs to be fixed as well. As a side note here, America's credit rating could get downgraded even if a default is avoided. Remember that they haven't actually fixed the default, the debt ceiling. Don't forget that major issue that Congress hasn't made any progress on at all yet. Yeah, so literally our U.S. credit rating could get downgraded as well, which would mean paying more interest for the U.S. government, as if we can afford that. But check out this here. A rapid fall in banking reserves held at the Federal Reserve for banks means that the amount of reserves that these banks are holding is pretty much at an all-time low. So this means that banks are not holding a lot of cash in case there is a run on the banks, which is happening. So when people go to all of a sudden withdraw their money, they have an all-time low of money actually there. So which means their money is tied up in assets like stocks, real estate, derivatives, whatever they happen to be buying, mortgage-backed securities, bonds, whatever they're trading, whatever they're investing in, whatever they're trying to make money on, the amount of cash they have on hand at the Fed or in their savings, in their checking accounts, they don't have a lot of it. Okay, you can see the chart here, right? So look at where they were just a couple years ago, and now where they are now, it's at an all-time low. And this is part of the reason why these banks are failing. They don't have cash on hand. So when you go to withdraw your cash, especially if there's a run on the bank situation, it could cause the bank to fail. And this leads back to this, which is why study finds 186 banks vulnerable to SVB-like collapse. These are big banks worth billions and billions of dollars. Is your money safe? We don't know. Maybe not. Now, if you don't know this, back in 2008 and 2009, we almost had a financial collapse of our entire system. Yeah, because what happens is some of the big banks, if they fail, it's a domino effect, and the whole system could go down. Now, it didn't happen, but it almost did. And if you've watched some of those big banking movies like Too Big to Fail, it was that close. It was that close. And the Fed had to step in to bail them out. And what's interesting here is they're already doing it here now in 2023. Yeah, the Fed is injecting as much as $2 trillion to bail out these big banks that are gambling with your money. Meanwhile, they want you to, reduce your spending on food and gas and eggs while they gamble with your money so that they can make billions and trillions of dollars. I mean, just imagine the audacity of what they're asking the average everyday people to do. Pay more money on credit card, pay more money on gas, pay more money on your home, pay more money on your car because of interest rates, and yet they're going to inject $2 trillion to make sure that these big, greedy banks don't fail. Meanwhile, the government has cut SNAP benefits, cut child tax credit money, and maybe more cuts on the way as they're going to reduce government spending. And if you've seen some of the proposals that we've covered here on our channel, especially from the Republican side, what they want to cut, a lot of it's going to come from low and middle income Americans' pockets from government money. They're talking about reducing Section 8. They're talking about reducing government help, health care credits. Anything that is help from the government, they're talking about reducing. Potential Medicaid, Medicare, putting health work requirements on this stuff. Yeah, there's a lot of cuts potentially coming. Now, the Democrats hate it, but this is where they're going to have a head-on fight. But if they don't come to an agreement, then we could have some serious issues like a government shutdown, a government default, and eventually they'll have to do something because they can't have a government default. So let me know your thoughts, and I'll keep you up to date here. But Too Big to Fail, another movie you can watch, very good information there. This is what's happening right now. Is our system too big to fail? But when it comes to the American people, it's you need to cut back. You need to do the right thing. But our big banks, our government, they can do whatever they want. Yeah. So let me know your thoughts in the comments. Thanks for liking and sharing these videos. Make sure to subscribe so you don't miss out on new videos. I'll keep you up to date. It's pretty much the only thing left that's free. That's right. Here's some videos you should watch next. Here's some big info on Social Security and Medicare. And here is another video on why the Fed might get fired. Yeah, very good video there. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.